Welcome everyone. Just give us one moment to get everybody up on the stage and we will get started. Thank you guys for coming out.
Hello.
Welcome, Sam. Welcome. Just sending out 8 DMs. Just posted a status saying we're live, letting everybody know the deal. How are you doing?
Thank you. I realized that. Yeah, I'm doing good. Didn't realize I was on mute.
Welcome back to Spaces.
Sam has a thing where he enjoys speaking on mute. It's a thing he's got in Google Meets, Dev Dailies, Twitter Spaces.
Oh no. Welcome Alex, behind the Mavryk Dynamic account. So welcome everybody. This is Theo Wayne behind the MavrykNetwork. We have Sam with us today, and we also have Alex, our founder behind Mavryk Dynamics. So welcome everybody. Like I said, I'm just getting invites out, getting statuses out, letting everybody know we're going. But yeah, we'll be starting here in just a minute. Alex, how are you doing today?
Doing good. Excited. Consensus is coming up. We're a Block 2 sponsor. Love to get into it, and especially what we're going to be showcasing there. So fun times.
Let's go. And as it says up top, it is an AMA. We do have some questions from you guys from our thread, but if you have any more questions, just leave them in the comments below. We will check them out. And we will also be trying to bring you guys up towards the latter half of the space to talk to you guys live and answer your questions live. So stay tuned for that. So Alex, tell us, what is Consensus?
Consensus is one of the oldest and largest blockchain conferences in the United States. This year, it's the 10th anniversary of Consensus, so it's going to be one of the biggest ones they ever have, if not the biggest. And it's being held in Austin, Texas. So really, if you have to think about being a Maverick or a cowboy going on your own, Texas is probably the best place to do it. And so we're bringing a contingent of Mavryks team to Consensus 2024, where we're not only sponsoring getting a booth, the normal shebang, but we're also sponsoring the Layer 1 protocol stage and doing a 45-minute workshop with a bit of a, kind of like a panel discussion, sort of not a keynote, but a fireside chat on real world assets and what we're building. But also, and here's the kicker, and this is where we didn't put this into the tweet announcement, wanted to leave it for the actual AMA itself. But at Consensus 2024, Mavryk will be showcasing on testnet buying a real world asset token off a RWA DEX that we've built on a RWA token standard that we've built, and then using that RWA token that we just then purchased off the DEX to deposit it as collateral to secure a loan and getting a loan against that RWA. So that is all on testnet, all on chain, all interoperably compatible with one another. And that's something that we're working our asses off towards getting running properly. Sam's giving a heart right now as his is like racing to get everything done properly. But yeah, we are racing to get that all working on chain by consensus and then showcasing it live in front of our audience.
Let's go. That's some huge alpha. That is some huge alpha. Wow, I have a lot of questions myself about Consensus now, but I do want to if anybody else, if you just heard what Alex said, if you have questions about that, please let us know down below, and maybe even send a request if you want to talk about Consensus and ask questions. Send a request, let us know. But so fully on chain, so that must mean good news for the Mavryk network if that's something that we are able to do at Consensus, yeah?
Yeah, of course. I mean, the layer one's is essentially, well, it's on DevNet now. Our wallet is in the Chrome App Store testing at the moment. Essentially being able to, a lot of times when you're building a startup, I co-founded a fund, and so you get these guys who just like you said, they send you a pitch deck. They don't have a product, they don't have any tech that's there, and they're like, "This is what we want to build." And what's different with Mavryk is that we've built it now. The layer one is on DevNet. The wallet is in the Chrome App Store. The protocol Treasury is also on DevNet. Liquidity Mining is on DevNet. We built a new RWA token standard because we kind of looked around at the market to see what's there, and it just didn't really suit for programmable digital securities. And we did something that most other people, one of the reasons why RWAs haven't really taken off is because, okay, you've digitized this asset. Now what can I do with it? Who cares that it's digital if it doesn't give you any additional means, right? So what we've done is actually created the infrastructure for not only the digitization of these assets, but also an OTC exchange for them, a decentralized exchange that operates kind of like a swap exchange, like Uniswap, and it's proactive market maker. You can't have it as volatile as Uniswap. You can't have it as stable as Curve. And then we've also built a order book exchange, as I like to call it, because the order book exchange everyone's kind of used to as a centralized exchange, so CEX or SEX, and then there's decentralized exchanges called the DEX. I like to call our order book exchange the sexy DEX, because like CEXY, because
We
it
need
seems,
t-shirts. We need t-shirts. That's hilarious. Are you kidding me?
yeah, it's so we've got the PMM DEX and then the sexy DEX, and I really think that name needs to stick because it's a fully on-chain order book exchange for peer-to-peer trades of RWAs. So it's sexy in multiple ways, I guess.
And now you mentioned that at the event you'll be showing how to acquire and then maybe get a loan off an RWA. So does that mean Maven will be there and be displayed at Consensus?
Yeah, so actually the loan will be provided by Maven, which is a full DAO lending protocol. It's basically a co-op bank built all on smart contracts, on-chain treasury, more decentralized oracles than Chainlink even. Nothing's a multi-sig on Maven. Well, I mean, there's a Maven council that is a multi-sig, but the DAO has to give actual on-chain power to the council to enact anything. So it's Maven will be showcased there as well. That is where the RWA will be deposited into a Maven vault, and then they will be borrowing against their RWA and getting USDT.
Awesome, let's go. And I did pull one of these questions from the Discord. It's one of the last ones I threw down there. And I wanted to just kind of talk about this today because this is, I think, the first space where we have all three accounts right here, right? There's the Mavryk Network, Mavryk Dynamics, and Maven. These are the three accounts you guys have heard us talk through, all year. So we're finally on the same space. So what is the difference between all three, right? So yeah, I wonder if you would want to run through that real quick.
Yeah, of course. To begin with, Mavryk Dynamics is kind of like your Mavryk Labs. It is the development studio that is building out all of these on-chain products for the ecosystem. It is a company. It is building. It's where we work. The Mavryk Network is the layer one blockchain that Mavryk Dynamics is building. And then Maven Finance is the lending protocol that Mavryk Dynamics has already built. So, the Mavryk Network is a blockchain. It's not a company. Not to get too pedantic about it for those who are aware, but and then Maven Finance is also a full DAO, not a company. Once we launch Maven, it's in the hands of the nodes that operate Maven. It's not in our hands. It is, like I said, a fully on-chain, decentralized governance bank, essentially. So we do have accounts for them, obviously, because, welcome to crypto Twitter. But the actual company is Mavryk Dynamics. And so Maven will be the flagship lending and borrowing protocol on top of the Mavryk network. And all of this is built by Mavryk Dynamics. So Mavryk Dynamics equals Mavryk Labs, simply put.
Got it. And just to clarify, me, Theo, you see it in my bio, and then Sam, Alex. So we all work for Mavryk Dynamics, right? And you will see us talk through these accounts. But just to make all that clear going forward, and hopefully that clarifies things for you guys as well. And so let's get into some of the questions. Before we dive too heavy into really anything else, right? Our first one from Fav. Will there be a lock period of assets provided on liquidity mining? Or will the assets be available for users to withdraw anytime at any moment? And if there will be, how long do you intend to keep it locked?
So that's going to be a no and a yes at the same time, Fav. Or Favidoc. And I don't know if he's my favorite doctor or Favidoc, but you got to tweet us an explanation of that name. So in liquidity mining, the liquidity mining treasury, which is a sub-treasury of the protocol treasury, essentially it receives an allocation of tokens, and those tokens, the validators decide on distributing those token rewards to people who deposit liquidity on the chain. Think of it as Curve's gauge system that you can redistribute the profits. In our case, it's L1 tokens, not profits from Curve, to users or dApps or devs. It can be anything, as long as it's an address on the chain. From a technical standpoint, what we're using it for is if you deposit USDT into a lending pool on Maven, then that can earn not only Maven tokens, but also the L1 token from Mavryk. If you deposit liquidity onto a DEX and the validators vote for that, then you'll get the additional L1 token rewards as well. So the rewards for the liquidity mining protocol that go into the LM treasury, liquidity mining treasury, they are locked because they distribute on a monthly basis. However, when you get them, when they're actually distributed to users, they are not locked. So from a user standpoint, when you get your liquidity mining rewards, they're yours. In terms of the allocation for the LM treasury, it's vested over 4 or 5 years. And so we can ensure that we've got a liquidity mining runway to consistently fund the ecosystem through that treasury. But from a user standpoint, they're unlocked.
Right on. That's going to be awesome. And I just want to sprinkle those in because we are here at an AMA. But jumping back to the consensus, right? So we're gonna give off a live showcase. You're gonna see how this stuff works on chain. You're gonna get a good look at the relationship between Maven and Mavryk, the blockchain itself. So I was really excited about this. How do I go about seeing or attending this showcase?
Well, you'd have to come to Austin, Texas. And it's been like 8 years since I've been in Texas, so I'm extremely excited for that. But it's been too long. It's been too long. It's one of my favorite states. So you have to come to Austin. It's the last week of May. There's a discount code for the Mavryk community if you use Mavryk Dynamics 24, I believe, or Mavryk Dynamics 20. Theo, you can post it in. You could put it in the nest, which is something that I learned recently of what that means, and you'll be able to arrive. We do have so we're going to be doing it. Sam can give you the exact details on when our showcase, that live workshop is. We are doing a swag competition for NFT artists. So one of the things that we want to do is actually, be a part and build our community. Mavryk is a digital that's supposed to benefit everybody. And quite frankly, every single layer one that came after Ethereum didn't really build a community. They operate like oligarchies. The VCs and the insiders, the foundation and the team, they earn the money, and then the community, if you realize why the ecosystems are floundering, is because they keep all the money for themselves, and sometimes they pay people to build on them. Money runs out, they run to the next layer one. What we want to do is actually our strategy, which is more towards the strategy of Bitcoin and ETH, is to essentially distribute the tokens in multiple different ways to different people that take part in our ecosystem, in our economy, because a blockchain is an economy. And so one of the ways that we're doing that is all these different giveaways. So for our swag for Consensus, we're actually giving away $500 to different artists who produce the best swag for us. So we don't just want to like take our logo and slap it on the side of our shirt. We want to do something that's more fun, that includes the community. Community gets paid for contributing to the network. And when the tokens are live, we'll be doing tons of stuff like this with the allocation of Mavryk tokens. So if you're an NFT artist and you're looking to get your swag all over the world, or to get it on the official, let's say, swag t-shirt for a layer one blockchain, then you can have like your art on a Mavryk t-shirt and swag that's given away at Consensus. And obviously you're going to get your own swag pack, and we're also going to help promote the artist as well.
Let's go. I'm just hearing about that as well. That's actually news to me. $500 to artists. That's going to be really great, and our biggest giveaway yet, I think. So definitely stay tuned for more information on that. And if you have any questions, feel free to come up. We are here. This is an AMA after all. Speaking about that, Fav, he has a couple more questions, right? So
it's funny, Theo, you say it's an AMA, and now I'm thinking like someone's asking what my favorite flavor of ice cream is.
What is your favorite flavor? Hey, what is your favorite flavor of ice cream? That's a good question.
Mint chip. But that's mine.
Yeah, I'm going to go with that Sam's answer that we love to give him hell over. I don't know. I don't know my favorite flavor of ice cream. I like different flavors of ice cream. I am ice cream flavor. Not anonymous. Crap. What's the word? I don't choose a flavor. Agnostic. I'm ice cream flavor agnostic. I will go with strawberry cheesecake or cookies and cream. But there's plenty
so
of them.
lame if you don't have a favorite ice cream. That is so incredibly lame. Who doesn't have a favorite flavor of ice cream?
Yeah, I mean, just one that you prefer.
Were you not a kid? Right? Like, is there not one that you'd like to have? If you had to choose out of 5 different flavors, is there not one you'd like to have out of all of those if you could only have one?
Mochi. You know what? I'm just going to go with mochi. It's a type rather than a flavor.
All right, fair enough. I mean, there's just like nowadays, lately, when I'm older, I feel like there's just the one I always grab, right? And that's coffee, cookies, and cream. I used to hate coffee growing up, the coffee ice cream, but I'm old now, so I guess it's my thing. But yeah.
Favy Doc's other question. Actually, Favy Doc, I have to say I loved your questions because it really dived into one of my favorite parts of the L1, which is the liquidity mining distribution. So Theo, hit it. What's the next question?
Absolutely. The next question has to do with delegation and how the fees work. So can you explain how delegation fees work in the Mavryk ecosystem? And is it only applied to the public node operators, or is there a unique feature of decentralized ID? Fav is curious how we intend to do KYC while still maintaining the core benefit of blockchain, right? Which is, decentralization and whatnot.
So there's a myriad of different points in there. Some overlap, some don't. I'm going to try and dissect the questions the way that I believe they're trying to be asked. So let's start with delegations. Let's say there's different, like stake is a very loose term in blockchain. But on Mavryk, you're going to be able to stake your tokens and delegate them. When you stake your tokens, it's going to essentially be co-staking, so you can contribute your tokens to a validator stake. It's non-custodial, so the validator can't actually do anything with your tokens except for use their voting power. When you delegate your tokens, they always remain in your wallet. They're never at risk of slashing. They don't join the core stake of a validator, but the validator does get to use the voting rights associated with your token. So the delegation, there is a fee for delegation because the validator is doing work for you. So they do garnish a fee for that. It's probably, you get validators that are as low as 5%. Coinbase, for example, takes 25%. So it's somewhere, I'd say the area is between 5 and 5 and 15% is typically the real brunt of the area, about 10% being probably pretty average. When it comes to Theo, so was the other question? There's something about delegating and KYC. You don't need to be KYC to delegate. It's a non-custodial, it's non-custodial wallet, and you don't have to have, thank you, permissionless chain as well. So you don't have to be KYC'd in order to stake or delegate your tokens. You just need to delegate them. If you want to use RWAs, then you have to go through KYC in a Mavryk Pro wallet. That being KYC'd for RWAs is standard by law. There's no way around that one. So that's where KYC comes in. And when it comes to the decentralization aspect, you can have decentralization. Decentralization KYC kind of don't go hand in hand. When it comes to RWAs, you have to have that in hand. So what we've created is a permissionless feeling environment for permissioned assets, but it's not related to staking. It's related specifically to RWAs. So you can have a wallet that is not KYC'd, delegate from there. You can have a wallet that is KYC'd and delegate from there. We do not even have the ability to block KYC'd wallets from delegating or staking. Your KYC actually puts you onto a whitelist, but it does not affect your wallet itself. It just affects what you can use in terms of RWAs.
Let's go. And then he does have one more question. Well, actually, I want
to. Oh my God, he just came back. He just appeared and came back to the chat.
Oh, all right, he's back. Well, you can come up too if you want to come up while we're asking your questions. If you feel like you want to dig into them a little more, feel free to come up. Right, it's an open floor if you have questions about what we're doing. And yeah, so let's back up and dig into that a little bit to kind of give like a walkthrough of like a normal user experience. Right, you'll just kind of set up a wallet, and that'll kind of just be it. I mean, me personally, like I buy and sell through Coinbase. You have your different available app depending on your country and your regulations. For me, the only one available here is Coinbase, so that's kind of where I like buy and sell crypto if I was to do so. So yeah, I would send. You can get whatever at Mavryk. You can get it in your wallet. You can delegate. It's just click of a button, and that's it.
To dive into that, Theo, to dive into that a little bit, we are building some interesting things into the Mavryk wallet as well, where there's a few things that we want to focus on, the user experience. I like to say that we're focusing on consumer experience, not just UI UX. And one part of that consumer experience is how do you get cash effectively into your wallet? And, for us, the people that know, that is stable coins, right? But for usually people would either have to buy stable coins with a credit card, or maybe move money to Coinbase and then buy USDC, send USDC to some other exchange, get USDT. I mean, it's a whole nightmare. So one of the things that we're working on is being able to wire transfer from your bank anywhere in the world, assuming you're not like in North Korea or Iran, money. So just a wire transfer basically to your wallet, and then a liquidity provider in the back end will swap that wire transfer into stable coins that are deposited into your wallet. And if you want to withdraw directly to your bank, you essentially send stable coins out, and then you will get fiat placed back into your bank account. So it's a direct on-ramp and off-ramp of fiat to stablecoin in the Mavryk wallet. Secondly is MPC. We're talking to a few MPC providers. It's multi-party computation. So for mainstream users, if you don't want to deal with private keys, you just want to log in like a regular account with a username and password, you'll be able to do that. There's Fireblocks, there's MP, there's a Web3 Auth, etc. There's different providers for this technology, and it just creates an easy onboarding tool as well. And lastly, there's the Mavryk Pro wallet, as I'd already mentioned before. So if you set up your Mavryk wallet with MPC, you log in with username and password, you wire transfer fiat cash into stablecoins into your wallet, you've already got a Mavryk Pro wallet, and then you can just go buy parts of a hotel or go get a loan. So we're really making the Mavryk wallet like a focal point of getting in and out of the ecosystem.
Thank you for diving into that. You guys are getting all the alpha. I didn't want to say too much, which is why I went to like the Coinbase method, because I didn't want to dish out too much alpha with the wallet, but thank you. That is, yeah. So there you go. You're gonna be able to just open up the wallet, transfer some money over. And then for when it comes to delegating, it's just a click of a button. And when it comes to the normal user, it's a vote, right? You're kind of giving your vote to somebody else, and in the end, really all that matters is, your
All that
voice
matters
is
is they
being
get
heard
paid.
and you're getting paid. I didn't want to say it that way, but yeah, you're getting a reward. If you don't delegate, then it's just sitting there, and you're kind of just losing out, right? So mentioning Coinbase forces you to delegate. If you were holding a coin and it says you get 5% APY, the reason you're getting that reward is because they are delegating your wallet for you. And that's what having a custodian wallet is like, right? They do all that stuff for you, but this is a decentralized wallet. So yeah, it's time for you to have all the power in your own hands.
It's a non-custodial wallet, which is a little more accurate. Coinbase has a custodial wallet where they're actually holding your assets for you. They stake your assets and delegate them for you, and then they provide you a yield and take a hefty fee. Mavryk Wallet is non-custodial, so you are in complete control of your assets at all times. There's no one who's able to take away your assets. You are in charge of your own financial future with us.
Let's go. And that is the overall goal, right? Providing a better financial future, and I'm here for it. So let's get to Bob's last question. His last question. Where is it? Let me find it. Lastly, what makes Mavryk liquidity mining different from other protocols liquidity mining? And then we'll start there.
That's a great question, actually. So the one of the biggest differences is that Mavryks liquidity mining is on a layer one ecosystem wide model, as opposed to liquidity mining for a simple, I don't want to call it DEX simple, but for providing liquidity to a DEX, or providing liquidity to a lending protocol. So like Curve's liquidity mining function, it's a gauge system, or Plenty DeFi. It effectively incentivizes liquidity on their DApp. Mavryks not a DApp. Mavryks a layer one. So for starters, we're able to incentivize liquidity across the entire ecosystem. So if you're a new DApp that wants to incentivize new users to use you on Mavryk, so here's where the kicker is that you can pay the liquidity mining treasury your own tokens or even USDT. So I like to call it an incentive. Other platforms call it a bribe, but the DApp can bribe validators to vote for their DApp and send liquidity rewards to their users. And the validators of the Mavryk blockchain will earn those rewards paid by DApps. When they vote for them, if they vote for them, those rewards are paid to validators according to their total stake, being their stake as a validator and also their delegations from users. So as a stakeholder of Mavryk tokens, you delegate to a validator that takes part in the liquidity mining treasury. Not only do you earn your normal APY from the inflation rewards, as every proof of stake blockchain does, but your validator will earn rewards on your behalf from all the participating dApps in liquidity mining and pay out rewards to you as a stakeholder. So you don't just get the L1 inflation, you also get rewards from the liquidity mining treasury as well. And that's a massive, I don't believe that's actually been done on a layer one ecosystem side of things. So it's sort of like, if you partake in Mavryk, you partake in the entire ecosystem. It's I call it a rising tide raises all ships type of approach.
Let's go. And then his final question at the end of that is, how do you become a validator?
Becoming a validator means essentially requires you to run some form of hardware. I mean, you could run it on a cloud. We prefer hardware. You need to have about 6,000, a minimum of 6,000 Mavryk tokens, a solid state drive. I'm literally running a node on a Raspberry Pi at the moment, and a ledger. So the barrier to entry is low. It is not so high. There's going to be software to help you run your own validator, and it just requires making sure that the computer is running and that you partake in governance both for updates to the blockchain and also the liquidity mining votes, which are once a month. And there's also a protocol Treasury. So if you've got questions about that, I can answer that. But the protocol Treasury votes are run by validators as well, but it's once a year.
So yeah, what is the protocol Treasury? What is that?
The protocol Treasury is essentially it's a on-chain treasury for the Mavryk blockchain itself, and this is why I like to call Mavryk a digital commonwealth. It's been used in other areas that have failed to actually do the common part of the commonwealth. As I've mentioned, most layer one blockchains operate as oligarchies, and so it is a smart contract treasury that is controlled by a treasury, a 7-seat multi-sig treasury council. And now you're going to say, oh, well, other blockchains have multi-sig councils, et cetera, except that they're all run by foundations. The Treasury Council on Mavryk, they are directly voted on by the validators. The validators elect the members of the Treasury Council to manage the funds of the smart contract protocol treasury. So the council members hold their seats for 1 year. The validators vote them in. There's different placeholders for different people in the ecosystem. So it's a 7-seat treasury council. 2 seats are open for anyone in the ecosystem. 2 seats are, you have to be a validator to even run for those seats. 2 seats are reserved for internal members of the Mavryk ecosystem. So if you work for the foundation, if you work for Mavryk Dynamics, if you're running a dApp on the chain, you'll be eligible for that. And then the last seat is a wild card where I'm going to be sitting on the Treasury Council. However, my seat is not hard-coded, like the validator seats, for example. My seat is an open community seat because even me as the founder, I need accountability. If the community does not want me to be there, I need to be overruled. And it also gives me the ability to step down. So it's blockchain is all about accountability, really. People think it's about being anonymous, being transparent, being open. All of those things all boil down to accountability. So Mavryk is going to be basically the only blockchain with an on-chain treasury that belongs to the token holders, belongs to the protocol. And that treasury will, it has 4 revenue streams. I didn't even get into that. But it will also be able to invest in dApps on the chain. It'll also be able to buy RWAs and earn money on behalf of the token holders as well. And this is the main reason why I call this a true digital commonwealth.
No, absolutely. And so we have a couple more questions. Let's get through them. If we have some more time, I'll ask some more protocol treasury questions because we'll definitely have to talk a lot more about that. It's so important, as you guys heard, for decentralization and accountability. And to kind of just wrap up everything we've talked about liquidity mining, validators, and delegating. So it sounds like a lot of work, right? If you're just, the common person just getting into all this stuff, sounds like so much work just for a little bit of rewards. So the easiest thing for you is just all you have to do is click a button, just hit delegate, let your trusted validator, let them handle all the voting, all the behind the scenes stuff. You just, salute them and go about your day. And that's the beauty of delegating. So Respect the Pump asks, what is the hardest thing to do in RWA? And I'm guessing that is, what is the hardest thing, for us when it comes to building new RWA technology that, doesn't really exist, right, anywhere else or hasn't before?
I think, the interesting thing about real world assets is, back in the day, they called them STOs and people were like, oh, we're going to get a token to represent the ownership of this programmable digital security. And that presents itself with a myriad of difficulties to overcome. Now, most of them have been everybody most people who are trying to set up RWAs back in the day didn't understand anything. They understood the tech, perhaps, they didn't understand the business behind it, or they understood the business behind it, they didn't understand the tech. So that was one of the bigger problems. There's a massive industry immaturity in this when it came to STOs. When it comes to RWAs, I think there's been a nice rebrand because people, I guess, get it now. We're still seeing some immaturity in the market, but what really is the problem is that people have created these RWAs. It's really not that actually hard to create the RWA. It's hard to create the environment behind it. So you've created this asset token. It, just to throw an example out there, you create this RWA token and it represents ownership of a company that owns a Marriott hotel, for example. Call it a Marriott in Miami. Okay, so there's 1 million tokens. You buy up, 100,000 tokens of it. You put 100K in, or you bought $100,000 of 100,000 tokens of out of 1 million. You own 10% of the hotel. Now you can hold that in your wallet and you can earn money, and that's great, right? Everybody loves dividends. Everybody loves passive income. That's wonderful. There's plenty of Web2 companies that have done stuff like this with what's called syndicating real estate deals. The harder part is ensuring that, is there a secondary market for this? There's a Jeff Bezos company called Arrive.com where you can go buy fractional pieces of a home or a fund that buys single family homes. But there's no secondary market. You can't actually sell it. So you earn the income from it. And when that company sells the house, do you only get the principal back out, and profit from that? But you don't have control of your asset. It's full Web2, full in someone else's control. With RWAs right now, there really aren't any secondary markets because they haven't created this composable ecosystem where it's like, okay, well, here's this RWA token standard, and I've ensured that this secondary market complies with the token standard. I've ensured that this lending platform complies with the token standard. And so you create this ecosystem of like different ways that you can use it. So the hardest part, I think, to me is not the regulation. Regulation is completely clear. It's a security, right? This is not a crypto token. This is not freely tradable on Binance. It will be freely tradable on the marketplace that we're building. It will be freely tradable down the line on INX, a security token exchange. But these are securities. Regulation is very clear about securities. You need to deal with broker dealers and all these different forms of regulation. That's simple. So the hardest part was creating an RWA token standard and then ensuring that the different DEXs comply with that token standards restrictions. That then also means that the lending platform where you go to borrow against your RWAs complies with it. And then also the liquidation. Actually, it's not so much the borrowing. Borrowing on your RWA is the easy part. Is that if you default on your RWA loan, it's the compliance for liquidating that loan. That's actually the hard part. So what we really need to do is like what really the RWA field is now, and I'm kind of going on a long tangent about this, so I apologize, but everybody seems fine with it so far, is like one person built a gasoline engine, another person built a tire, another person built a wheel, another person built a chair, another person built a chassis, another person built windows, another person built a windshield wipers. No one is talking to each other to put all of these elements together and create one vehicle that you can use to drive down the road. And that's the hard part, is coordinating all of that. And so with Mavryk, we're giving you like an integrated Apple-like experience where on Ethereum and Tezos and Solana and Cardano, everything is fragmented like Linux or Android. If you use Mavryk, you know it all works together. That's the hardest part of RWAs, is that full composable integration.
God, isn't that the truth of just like Web3 as a whole right now? But it does lead me into another question that I pulled from the Discord, actually, that goes right off the back of this, which is how will RWAs reflect on, real physical ownership? So, what stops there from being the equivalent of, 1 million metric tons of gold in RWA when there's only, a certain finite amount, like say 244,000? What stops somebody from over tokenizing a real world asset, or say taking one real world asset and making multiple RWAs?
I love that. I love that. That's funny. The over tokenization of something. That's a good line. So that's just flat out normal fraud, and real world assets don't particularly. The technology here is not what prevents someone from doing that. And by the way, when it comes to commodities, I don't think commodities are the low hanging fruit of tokenization. Everyone keeps talking about it, and I think it's even it's the long tail of RWA tokenization, which is going to be yield bearing assets. Just like every other investment, you need to do your due diligence. DYOR, as they say, do your own research. You're going to need to ensure that, when you tokenize, let's say a hotel, or you tokenize a house, you're not actually tokenizing the deed of the house. The house goes into a holding company, and you're tokenizing the shares of ownership of that holding company. And different forms of shares have different, rights. You could be buying for example, INX tokenized, did a security token, and the investors were buying into the profit flows from INX's exchange. It doesn't give them voting rights for the company. It doesn't give them voting rights if the company gets sold. A company like Lofty, which is built on Algorand, allows people to tokenize their own deals. And effectively, how that's worked out is that people have created these security tokens that give themselves a home equity line for the most part, not all, but for the most part. And so when you're buying that security token, you're effectively giving the homeowner a loan on their house backed by that collateral, and then they buy it back from you. So most of the time, you're not buying that principal of the house itself. So you always have to ensure, and this is like with everything, if you're buying a new crypto token, what is it? What are you getting into? Is this like a fake BTC? Is it a fake ETH? Is it a fake this or a fake that? You always have to do your research. However, when you do your research and you understand, okay, XYZ company in this country does in fact own this property, and these are my rights, the token gives you that the same way that if you buy like stock of a company in the private market, private equity, then you have real ownership rights legally by owning this RWA token over that company that holds that asset. So it's RWAs don't restrict fraud from happening. Fraud will always happen in the rest of the world. What they do ensure, though, is that if it when it does really own that asset, that you legally have rights to that asset. And besides for the fact that it opens up accessibility, there's a whole host of benefits to RWAs, but it gives you essentially RWAs give you legal rights over the asset that you're buying. Just make sure you're buying the right asset.
That's going to be a tricky one. That's going to be something that we all have to kind of go through together, I think, when we're in the thick of it, and just we have to just keep an eye out for those bad actors.
Well, yeah, I mean, I think there's going to be a lot of companies. I mean, it's gonna end up being that there's going to be tokenization companies that have a better reputation, and tokenization companies that you end up finding fraud took place on them. So like all things, like all exchanges that started up, you got good exchanges that stood the test of time, and you had fraudulent exchanges. So over time, because we are human beings, there will be brand reputation. And that if you go to, let's say, Equities, which is the platform that we're building for RWAs on Mavryk, haven't really talked about that much, so that's all I'm gonna tell you there. You're gonna know that Equities does the due diligence on deals, and all that information will be transparent. And when you go to look at it, you'll know, here's the information, here's the legal bits, here's all the proof. I know it's a good deal. And we're going to build our reputation based on kicking ass and providing good deals and opportunities for people. So, and then you'll get others who do a couple, basically rug pulls, the same thing. That happens in every industry, unfortunately. So it's gonna boil down to brand reputation over time.
Yeah, definitely. And then, you cut out, Alex. You switched over, so I don't know when you cut out, but yeah, it's definitely going to switch over to, just trusted brands. You will see those, in the end, and we saw that happen with Web1, right? It's how we ended up with the Facebooks and the TikToks. We might not trust them much nowadays, but they, in the sea of Web1, they did come out on top of, being somewhat trustworthy. Apple, as much as I disagree with the company in a lot of aspects, have some really tight security, and yeah, it's pretty cool. So getting back to the questions, This cycle is referred to veterans as the era of 1,000 chains, which is epic. I've never heard that. How does the team plan on distinguishing and making ourselves different from the thousands of chains yet to come?
Was that Ian's question? I feel like I've seen Ian's question somewhere.
That's not
That he
Ian's
posted on.
question. That is from Crypto Psyche. Given
Okay.
there's another part here that I missed. Given with the ease of which it is, to deploy a blockchain these days, how do we plan to be different? And there's a lot to this question, right?
There's so much to unpack in that question, so I'm gonna try and keep it a bit high level. Whoever asked that, if you'd like to come up and dive into it, I'm happy to dive into the weeds of it. But there's a lot in that question. It is getting easier and easier to launch your own blockchain today. Mavryk specifically, we're launching a layer one. Everybody always asks, do you really need a layer one for this? Why can't you do a layer two? And for the most part, every layer two on Ethereum is centralized, and that's something that we don't want to do. We still believe in the ethos of decentralization. And when it comes to the validator set, the validators really help you build a commonwealth of like-minded individuals, or not, right? Because it's a democracy, that come together so you can delegate your voting rights. There's no delegation on a layer two. You have essentially centralized sequencers, and essentially, for the most part, a centralized node or a single node operator. So you don't get that. And then there starts to become questions of like, okay, well, you could do a layer one via Cosmos, because Cosmos being a layer zero, and then you can launch your own layer one that way. But again, similar issues with validator issues, and also I'm personally not a fan. I don't believe in modular but non-monolithic environments. When we tokenize an asset on our chain, I want to know that as the founder of Mavryk, that when we go to a real estate manager and say, we're tokenizing your portfolio so that you can sell off 25% of it as a tokenized amount, for example, it will work with Maven, and it will work with the other lending platforms that come onto our chain as well. And so if you have a modular system like Celestia or Cosmos, you can have that. So, you can technically use IBC to jump from one to the other. Your regular user is never going to be able to figure that out. My father was loving the bits. He was not great at remembering his Binance password, and I had to help him with that all the time. So it's jumping from chain to chain is going to be a problem. Now, what makes Mavryk stand out in that case is one, again, we're not running our chain like an oligarchy, and that is every single chain after Ethereum, and it's every single time. Tezos raised $232 million. It's worth $1 billion today in their treasury. And what's happening on the chain now? EOS raised $4 billion supposedly. What's happening on the chain now? The Aptos went live at a $6 billion valuation. There's no upside potential for any of their stakeholders. There's almost no economic activity. Solana is probably one of the only chains that's breaking out of that thesis that I'm writing. But but to be fair, they don't give the regular user the ability to, I don't want to say gain wealth, but to be a upper middle class participant with disposable capital in their ecosystem. And that's something that we're changing both with our airdrop, the incentivized testnet, the protocol treasury, the liquidity mining treasury. We built on-chain bounties and grants. And so we're taking a completely different approach to going to market, which is not, we're going to go raise $500 million and make our VCs even more rich and then dump on the public market, which is effectively what IPOs are today. IPOs are dumps on the public market as well. We are building our ecosystem to benefit the users. And that's why we got along with Commonwealth so well with putting together the free fund is if you build a sustainable model and you have your foundation be accountable, so we've got a centralized foundation, but also an on-chain protocol treasury that's run by the ecosystem. If you do that, then you'll build a sustainable model for the long run in the future, and you'll build sustainable growth for the future. And you won't see these charts where like, oh, you hit an all-time high because only 1% of your tokens were on the market and then everything dumped because the VCs had their unlocks. No, you're going to have sustainable growth in an ecosystem that provides accessibility to investments that no other blockchain is able to bring.
Absolutely, which leads me into my next question. And before I do, I want to clarify, Alex, on the ICOs. The ICO just means initial, if you don't know, it means initial coin offering. Now, there's many different types of ICOs, and yes, it can be a point that people use to fraudulently steal a lot of people's monies. But in the end, it just means initial coin offering, right? So when you yourself buy the token publicly. But the question is before that, actually, when TGE, which I recently learned means token generation event. So that's even earlier than a coin offering. When is basically when launch, right? I believe is the question.
Well, I mean, I was more specifically referring to IPOs, initial public offering, which is when a company takes their stock live on a publicly traded market like the New York Stock Exchange. And if you look at IPOs, yeah, they've gone up, but the real money is in private equity, and they're getting invested in earlier and younger at smaller valuations. Like for example, Coinbase IPO'd. I mean, it didn't actually raise money in their IPO; they just directly listed at $100 billion valuation. That's the first time the SEC ever considered it safe for the regular person to buy Coinbase stock, was at $100 billion valuation. And the only thing it's done since then is go down to the point where it went down like 87%. And again, it's one of the problems of dumping in the public markets. ICOs kind of had that same thing, but ICOs come before TGE. It's when they raise capital to build a product, and then TGE is when the token goes live. So when TGE, we are our roadmap's a little malleable at the moment, but we're looking at something like Q3. That's something that we're towards the end of Q3. We're looking to take the entire chain live, and also dApps on the chain as well. So most blockchains go live with most of the time next to nothing on them. All the time with us, there's going to be Maven, there's going to be oracles, there's going to be, I mean, our wallet, our what we call the Nexus is going to be there. There's going to be an incentivized testnet first. Everything's on DevNet now, and so that's that TGE question. Before, also something else. I'm wearing noise canceling headphones, so in case I'm yelling, it's because I can't hear myself. So I hope I'm not barking at you guys.
No, you sound great. You sound great. I always get worried about my audio on the recording end, but you sound amazing. But that leads us into our final question, which is from Ian, by the way. What can the community do at this stage right now to help all things Mavryk and Maven move forward? And then he also says he's excited to have been introduced to us through Commonwealth, and we are excited to be introduced to you, Ian. You are an awesome supporter, so thank you.
Yes, thank you, Ian. Honestly, it's been great to have you a part of this. We're building a community, and the biggest part about being a community is being active, being engaging. We're always here. You get a lot of blockchains and projects where the founders are not speaking to anybody. I'm extremely busy. It may take me a little bit of time to get back to you, but I do. Is get the word out about Mavryk. We've got these AMAs, we've got consensus coming up, we're working on all these RWAs to come on chain. I mean, it's unbelievable the amount of real estate that actually the owners don't know about how a blockchain works, but they want to be involved. So it's making Mavryk memes, taking part in the swag competition that we've got going on for consensus. I mean, it could be cowboy themed swag, or a bull market themed swag. It is Texas at the end of the day. We are in Dubai, so it could be this Dubai Texas theme. Who knows? But the point being is getting the word out about Mavryk, building the community, taking part, speaking about us, and overall being involved. That's the biggest part of in terms of what can all our users help do for this, is understand that this is a community effort. This is a blockchain that will benefit all of its users, not just the early contributors to the token, not just the team, but it's being built to enrich the community, to enrich the Commonwealth, as I like to call it, because the blockchain is an on-chain economy, and an economy is nothing if it doesn't have a strong middle class.
Absolutely. And there is many things we can do to have fun as a community and to get together as a community and get to know each other as a community. Discord we just recently updated that, so we now have games and activities going on. Join us. We just added Rumble Royale, so we're all in there getting our dailies, fighting battles, battling each other out for funsies, playing games, playing golf, racing, and just having fun. If obviously you guys are here on Twitter, but this space is actually being streamed live right to the Discord. And so we're doing a lot of cool things with that as a community. So definitely come join us. And speaking of, it is bridged with our Telegram. So if you want to join our Telegram, you won't miss out on really anything. I'm not sure what Telegram has for games, but we'll look into it. Yeah, so join us and yeah, have some fun.
Yeah, and Theo, there was actually a couple other questions, a few that were DM'd to me or that were posted on Twitter. One of them, he didn't post this publicly, so I'm not gonna mention who asked it, but he asked, do you use Etherlink and other plans to do it? Etherlink is a EVM L2 with a decentralized sequencer. We do eventually plan to have what's called an enshrined rollup, which means that our layer one, the Mavryk layer one, will know how to interact with the layer two with a decentralized sequencer. So it's very different than Optimism and Arbitrum in that capacity. And eventually we plan on integrating like a high throughput rollup that the entire ecosystem will run on, so that it still remains as a monolithic ecosystem. So there is that. So if you're out there listening right now, or listening to this recording, eventually, but not immediately, we need to, as our technology, as the core teams building the technology that we're using, deploy, test, and ensure that the technology is robust, we will use it. Secondly, there was another question from Mavryk. If you saw that, I think Theo, you answered that on Telegram, but I do want on Twitter.
Answered it. Yeah, I was gonna leave it up to you if you wanted to share live here, but yeah, go ahead.
Yeah, I'm happy to do so. Let me just scroll down to it. Let's see.
It is on the document you have too. It's the first one at the top.
Oh, okay. So yeah, I'll get off the Twitter then. Mavryk, NFT artist out of France, has asked, any chance you can explain during the live what elements you changed compared to Tezos to make it a better chain? That's a really good, interesting question, simply because we're big fans of the tech that Tezos has created, not the biggest fan of how that technology has been used. And so, and I think this is a question that applies to most blockchains, and it's a question that's like, oh, what makes Mavryk different? And it's you've got great business minds mixed with great tech minds mixed with humans. Like really, we've got accountability and human accountability as well behind it. So we did make different elements. We did make several changes to the core code base of Tezos, and that namely being is transaction fees. So on Mavryk, 50% of the transaction fees are going to be burned. The more economic activity, the more of the L1 native token Mavryk are going to be burned. That helps offset the security inflation that's paid to validators. And it's kind of very similar to Ethereum's burn mechanism. 25% is going to be distributed to validators as a reward for, they do validate all the transactions on the blockchain. 25% are going to flow into the protocol treasury. So as I mentioned, the protocol treasury has 4 streams of revenue. One of the other elements that we did is we actually built a protocol treasury on chain. So I believe we're the only blockchain with a fully on chain protocol treasury, and it earns revenue from 4 places. One of them is transaction fees, as I just mentioned. The next one is block rewards. So 1/16 of the block reward inflation flows into the treasury. And another one is it's got allocation of tokens from TGE as well that are vested over time. And lastly, which I always have to look this up because I always forget one of the 4. It's extraordinarily annoying. Sam, chime in if you remember the fourth one. It's always one or the other that I keep blanking on. I mean, the protocol treasury can make investments, but that's not really an income flow stream. It's not a constant thing. But it has a revenue flow from investments that the Treasury Council essentially deploys. And then the last one is public goods income. So if you buy a domain name or if there's on-chain advertising, which we haven't built yet, so 50% of that public goods revenue is burned, and 50% goes to the protocol treasury. Think of it as sort of like if you live in a state with toll roads on your highways, think of it as every single time you pay your toll road, you go through and you throw 50 cents in the booth, and I know they're not really 50 cents, bear with me, but that's might have been the last time I paid a toll in Florida. So imagine 25 cents gets burned, 25 of that money gets taken out of the US circulation, the M2 money supply, and 25 cents goes to an accountable treasury in the government. Now, the good thing about the blockchain having a on-chain protocol treasury is that it's accountable. It's not like the US government. So you can actually see all the money that's in there. So half the revenue gets burned, half of it goes to a protocol treasury. That's one of the things that we've added as opposed to change to Tezos. Another thing we changed is the wallet addresses are MV. And another thing is, as I've already touched upon it, is that inflation. So Tezos features a inflation mechanism called liquidity baking, and we've actually built the only dedicated front end for that exchange, but it's a DEX built directly into the protocol. We are redirecting that inflation rewards, those inflation rewards from the DEX, as we've already got our liquidity mining protocol, to the protocol treasury. So that treasury grows over time from effectively 5 income streams. So Makeul, when you're out there and listening to this, those are the things that we've changed that core code base. And like I said, it's not the technology that's the problem. It is the execution of that technology. It's the onboarding of products. And this is a problem for every blockchain that came after Ethereum. They kind of operate like Russia and Venezuela as opposed to the UAE. In Russia and Venezuela, the oligarchs, the elite, the government, they have all the money. Their citizens, their societies, their users effectively have none of it. As opposed to the UAE, where the UAE, found oil, and then they use that oil to build infrastructure. They built that infrastructure. They incentivized companies to come build here. They built a middle class. Now their citizens are rich off real estate. They didn't directly pay their citizens, and they've built a strong, middle and very upper class that now has a healthy economy. And so we're taking a completely different approach towards building our on-chain blockchain economy than every blockchain that came before it. So it's not the change to the tech, it's the change to how you use that tech. With great power comes great responsibility. Theo, I know you're going to love that sentence.
I do love it, and apologies for the distraction. We got Sam back. Sam,
Massive,
we've had some
massive tech issues in the past 30 minutes.
Yeah, sorry about that, Sam.
Freaking Twitter guys. One of us buys it and breaks it. So bad.
Oh yeah, no. So Sam, hopefully, although you've had issues, I didn't even see your account down below. I didn't see any requests. It's actually why I brought Alex up as co-host, just in case. So I'm glad we got you back up here. Now we talked about a lot, while you were away, and is there anything you want to add to the conversations, to touch on anything me and Alex said?
We just lost Sam again.
Oh no, God.
Yeah, I'm gonna have to see what's going on with that. We're on the same Wi-Fi right now, so I don't know what's wrong. But also down below, guys, Ian, Matrix Coder, anybody else want to come up? Do you guys have questions that you'd want to hit us with live? I mean, I've kind of taken on probably the more rough ones that I think people are trying to ruffle our feathers with. But if there's anything any of you guys down below want to come up and ask, feel free. It's an open floor. Hit me with anything. Except for ice cream. We've already answered that
one. In the meantime, while we wait, for any requests to come in, I want to touch back on the on consensus, right? Just to leave it with fresh in everybody's minds before we wrap up. Yeah, 20% off. your tickets. It's in Austin, Texas. You can get the discount code up below. Alex, tell us once again, why should we be there?
I mean, Consensus is one of the biggest yearly events, and it's also one of the most serious ones. You know, you get a lot of these blockchain NFT conferences that just they just really don't. They don't. I don't want to say they don't take themselves seriously. I understand that they need to fill their booth space, but you know, when it comes to the movers and the shakers and the people building incredible things, Consensus is really where to be. So if you happen to be in Austin, if you want to help keep Austin weird with Mavryk, or you just want to contribute to getting your art onto a Mavryk swag for the event, you know, we'll be, you know, take part in our merch competition. We're giving away up to $500 to different artists to create swag, and the best swag wins, obviously. That'd be awkward if it was like the worst swag wins, but you know, just has to be said. And as well as, you know, if you want to actually view in person for the first time, having RWAs bought off a decentralized exchange and used as collateral, take a loan, we'll be doing that workshop in Austin as well, and that's one of the main things that makes Mavryk so special. So you know, you get to come out, meet us, see it in action, and yeah, I mean, you know, Serena, you hopped up on here with us, so I'm sure you've got a question.
Well, this is Serena's husband. I'm listening with her now. And
Hello, Serena's husband.
yeah, my name is Daffy Reed. I'm logged in with her phone. She's here too. I have a question to ask because I heard you talk about validators, and I think it's something that I'll be interested in doing. So I decided to ask if you have instructions on how to be a validator and what's the cost of being a validator.
That's a great question. The cost in terms of hardware is not high. You need really the most basic computer to do so. We're running a node at the moment on a Raspberry Pi. So, you know, Raspberry Pi, solid state drive, mouse, keyboard, monitor, you know, if you're not considering those things. But if you're just looking at like the base, if you have like the basics, like a keyboard and a mouse, you're looking at a Raspberry Pi and an SSD, you're looking at 100, 200 bucks for the hardware, a couple $100 for the hardware. And
Okay.
then you're looking at a minimum of 6,000 tokens to start a node, well, to start a validator. And then that really depends on the market price for validators, you know, for the tokens. So, you know, it's considerably lower than most other permissionless protocols. It is kind of like the right balance for security and stability, but the minimum is technically you could do it with 600 and receive 5,400 in delegations. I don't like to put that out there because people then think they can actually do it with 600. But if you want to run it on your own with no external delegations, 6,000 tokens.
Okay, that's fine. I'll follow you from my profile and maybe follow up on this.
Awesome. And as it goes, you know, like new chains when they're first launching, you know, their value grows over time. So the earlier you get involved, effectively, the easier it is to acquire that amount of tokens.
I totally understand. Okay, I'll be off now.
Awesome. Thanks for coming up. If there's anybody else that wants to hop up and ask any questions, I'm not sure your voice can dox you, but or it could. Maybe I know some of you guys, and these are just your anon accounts. That's happened before, actually. Someone came up to me. I know them on from the Twitter space from back in the day, and then I saw they were in Dubai for Token 2049, and I'm like, hey, I know you want to stay anon, but if you want to grab a beer, let's do it. And he goes, actually, we met during the conference, but I need to stay anon, so all the power to you and what you're doing. And I was like, damn it, like, just want to grab a beer with this dude. Apparently, I know him, but it's his anon account, so. You know, if there are no other questions, I think that kind of wraps it up. You know, follow the Mavryk Twitter for the discount code that we've already put for Consensus. Come see us in Austin, Texas. It's going to be a blast. I mean, if you guys saw Sam's mustache, you would also be excited to get Sam's mustache in Texas. And then also where we go from that afterwards, where we go from DevNet to testnet and testnet to incentivized testnet, and then complete mainnet with RWAs. So Theo, you want to sign off unless there are any other questions that
no,
that
I
pop up?
haven't told you yet, but my goal is to just get everybody, women included, who are Mavryks to just rock a mustache. Like that's just gonna be our PFPs going forward from now on. Doesn't matter what it is, just throw a mustache on it. That's us, Mavryks. Let's go. We're flying high, baby. But thank you guys
I'm
for coming.
not gonna ask. I'm gonna keep my wife from listening to this part of the Twitter space. I'm not sure I'm a fan of that. But
Well. I mean, you're the one who went there, right? All right, guys. Thank you for coming out. Thank you, everybody, for coming out. And like you said, follow us on Twitter. Get your discount codes, and if you want to be a part of what's going on, if you want to just engage with us, get to know us, feel free, join our Discord. It's not every day you get the chance to really get to know the team behind a blockchain this intimately. So definitely join while you can, right? While it's still, while we're still building, get in there early, get to know us. And, I'm sure one day there's going to be so much activity going on. It's going to be so hard to see. So get to know us now while you still can. And with that being said, thank you, everybody. And you have a great day now.